Hello, I'm Douglas Brodie, Lead Manager of the Edinburgh Worldwide Investment Trust, or EWIT. Welcome to this update post-final results to the end of October 2023, accompanying 2024's AGM. In this short update, I'll provide a reminder of what we seek to achieve with EWIT, touch on recent performance challenges, and then focus on our recent observations of the portfolio and the market environment, which makes us optimistic about future returns. EWIT strives to understand how the world is evolving and which companies are best positioned to both drive and benefit from that evolution. That demands that we look forward. It demands that we remain obsessed with technological and scientific drivers of change and seek companies that can convert the possible into tangible long-term commercial success. And to us, it also means actively looking at smaller businesses, those companies earlier in their life cycle, less mature and below the radar, essentially aiming to access growth off a lower base and retain special businesses as they grow and thrive. When we conceived the investment philosophy behind EWIT, we knew our distinct growth style wouldn't succeed in all market conditions. And there have been several times in the last 2 decades or so when Baillie Gifford has been running the trust when that has indeed occurred. Nevertheless, the past 3 years, as defined by the post-pandemic turbulence and uncertainty and the associated inflationary shocks and that real contraction in investors' time horizons, have undoubtedly been incredibly disappointing, and we recognise the challenges this has posed for our shareholders. Yet, as bruising as the recent performance has been, the prospect of robust long-term returns looks more attractive than at any time in recent memory. This could be a pivotal moment with the potential to shape long-term returns, and we believe being thoughtful, brave, and patient now can result in significant future rewards. Such is the confidence in the trust, its portfolio, and its approach that we have been demonstrably increasing our personal holdings. And we feel comfortable making these claims based on a combination of 3 factors. Firstly, the holdings are standing up to the more challenging environment. Secondly, technological progress remains very much alive and well. And thirdly, valuations look attractive and present real opportunity. We've previously suggested that the era of abundance and free money was making way for an era that was rewarding better productivity and business efficiency. And this was being married with a tempering of demand in many areas. And we've observed accumulating evidence of our holdings responding well to these changes. I'd highlight Zillow in the US, where their real estate platform is performing well, JFrog, the software automation business, and LiveRamp, the advertising data insights business, all delivering good progress within harsh conditions. And despite the challenging market environment, we are seeing many of our smaller holdings perform well commercially and indeed in share price terms. Demand for American superconductors' resilient power systems grew strongly throughout 2023. Digimarc has seen increasing success in the adoption of its product digitization technology, and there's really been robust demand for its products in the retail sector and for sorting and recycling plastic waste. Notably, health systems globally have had to contend with a lot, all the way from staffing shortages to rising costs of care and biotech funding pressures. And while our holdings have not escaped entirely unscathed, for many, their propositions address or chime with these issues. Schrödinger's small molecule modeling software allows for more digital drug discovery, saving both time and money. Cologuard from Exact Sciences, with its ease of testing and class-leading accuracy, facilitates earlier detection of colorectal cancer, and really catching these cancers earlier improves the patient's outlook and reduces subsequent strain on health systems. So although the broader health sector is experiencing challenges, these could indeed act as accelerants for some of the holdings whose propositions are around lower cost and more efficiency than the current status quo. A healthcare holding, Novocure, has been our most challenging investment over the year, albeit we think for idiosyncratic reasons. And we have long seen a role for Novocure's novel tumour treating technology to expand beyond glioblastoma, a rare aggressive form of brain cancer. And while its attempts to prove this technology in the treatment of late-stage ovarian cancer patients was unsuccessful, the clinical data in its pivotal trial in lung cancer we felt was very encouraging, especially the clear signal that when its treatment works well, when used alongside cancer-fighting antibodies that have really become the backbone therapy in many types of cancer. Secondly, we view the opportunity for innovation and progress really as more potent than ever. Entrepreneurs, innovative companies are creating products and services on many frontiers that we think will transform societal expectations. Generative AI, given its real domination of investors' attention over much of 2023, is perhaps the most topical and apparent example, and the greater use of these capabilities was driven both by necessity and the transformational improvements in automation enabled by newer forms of AI. And we're increasingly convinced that these will significantly impact many industries and shape the investment returns available. In several portfolio companies, new AI capabilities are expanding the opportunity, adding aspects of competitive edge, and generally contributing to these holdings' strong execution. For example, CyberArk, the information security business, just that increased ability for AI to almost impersonate humans, is driving up corporate spend on cybersecurity around user identification, while for Upwork, its freelance marketplace has really become the go-to venue for accessing AI talent. So while much of the early headline-grabbing AI-led excitement has been around the chips and the infrastructure, the more impactful opportunity will come as these tools are applied to solve real-world problems. And excitingly, that is only just getting going. Yet, we'd stress that the portfolio is exposed to several influential and exciting structural growth themes, be it in next-generation healthcare, with Alnylam recording good commercial progress from its launched drugs and indicating promising results from earlier stage treatment for both hypertension and Alzheimer's disease. Or unlocking the vast potential in space with SpaceX, really cementing its edge in launch capabilities while developing Starship and driving Starlink to greater commercial maturity. These types of examples demonstrate that innovation and human ingenuity are very much alive and well. It's understandable to have lost sight of this amid the recent struggles and concerns, but we believe these themes are the profit pools of the future, with not only the most significant potential to influence society over the coming decade and grow meaningfully as economic areas, but also generate companies with the potential for supernormal returns. Finally, what's exciting is that the recent market turbulence has rebased the valuations of smaller capitalized growth businesses. This allows us to access and own more of these influential companies at attractive valuations, with our ability to access what we feel are the most relevant companies, whether they be publicly listed or private. It's a fascinating and enticing situation. We believe many of the companies with the greatest potential to deliver change are the ones the market is shunning. And in this current risk-averse environment, they're seen as the reckless, pre-profitable companies early in their life cycle with the temerity to believe that things can be different. With the stock market reflexively punishing such companies and aggressively discounting their potential, those of us who believe in progress, long-term relevance, and human ingenuity have become the contrarians. Our recent portfolio activity has been geared towards capturing the current opportunities. We've exited companies where the investment case was not progressing as hoped, and reduced holdings in companies where we felt the market was catching up to our view. We've deployed the resulting funds into other holdings where we think the current market pricing does not reflect the long-term potential and recent execution. Therefore, notable additions were made to Oxford Nanopore, to Sprout Social, LiveRamp, Beam Therapeutics, and King D. We've also taken an initial position in MP Materials, an American miner of rare earths used in high-strength magnets for electric vehicles and wind turbines at what we think is a very attractive entry point. The vibrant operational health of the portfolio, the outstanding potential for novel innovation, and current attractive valuations are, we think, a potent and potentially rewarding combination. And we recognise it's been painful for clients recently, and we are grateful for their patience and tolerance. But we believe that the probabilities of long-term attractive returns now look tilted in our favour. Finally, can I please remind viewers that EWIT's AGM is on the 5th of March, and encourage you all to cast your votes in advance of this where possible. If you hold your shares through a share platform or other nominee, you should contact these organisations directly as soon as possible to arrange for you to submit your votes in advance of the AGM. Alternatively, the Association of Investment Companies, AIC, their website has information on how to vote your shares if you hold them via one of the major platforms. Thank you very much for watching.